So this is an example of how we trade, and the first thing we do is we look at the 30-minute and look for a bias. So this is today, which is Thursday the 5th of October 2017, as you can see down there from this grey line. We've seen that the channel broke out here, went up, couldn't make a new high, and then failed. And the reason why you can see it failed is because you can see this trap here. You can see wick here, broke up, tried to go higher with this candle short bias, then long bias because it ate up that candle but didn't make a new high, and then this big bearish bodied candle but still with a wick, and then the confirmation is here when you see this wick, and then further confirmation there. So at this area here, you know you are there are traps. What have I done there? Okay, didn't want to put that on. Yeah, you're trapped here. So that's the first thing on the 30-minute. Then we came down to this line down here. So we have fibs, which is the way I used to trade, and I still use the fibs, but I don't lean on them as heavily as I used to. So down here you'll notice that if we zoom out like this fib line happens to be a strong area of support. You've got one touch here, two touch, three, a whole wall of support there. It gave way momentarily, then came back in via an appendix and touch, and now we're down here. But given the way the price action came into that via this trap, and also the fact that we're looking for traps, so you see this hammer or pin bar, whatever you want to call it, it shows rejection of the support. It's also an area of support. So traditional candlestick methodology would have you go long either on the close or the break of the high. If we get a break of the high, we've got two groups of traders going long. We've got the ones that went long on the close, and we've got the ones that went long on the breakout. Now, how would you feel if you were looking for a long trade? You got long, you were the second group of traders who got long a tick, half a tick above the high of this. After this half-hour candle here, you're thinking you're screwed, right? So now, when it further confirms, you're gonna have to liquidate for a loss. And panic is stronger than greed, so that's why we want to get on the other side of traps. We want to trade in the direction of people's panic. So you see the trap there, you see it end, you see the trigger there, and when that candle ends there, you know it's game on for downside. So now we go over to the 5-minute chart. So let's remember that price level, it's around 80, 780. So we go to the 5-minute, and this is what we would see. Well, this is what we did see. And we traded this today, but very poorly. That's why I chose to share it, just to consolidate our knowledge. So here you see, this is what I call a chop to knot. You have a series of small bodies, and then it gave way with this big bodied candle here, and larger range candle. So this is your chop to knot. So the chop to knot can be looked at either from body or from wick. And as you can see, the wick is the one that came into play, which we'll look at now. So you came down here, reversal candlestick, a giant reversal candlestick to the upside. Now you're thinking, good, let's go long. This is still, by the way, within the range of that trigger, that is here. What we're looking at here, around 88-ish, right? So if you go here, 88, it triggers, buyers come in as well on the high, and then when it rejects that chop to knot and closes deep red inside this candle, that's the first warning sign. And then if I get a pen, hold on, if I get this pen, you can see high, low, high, low. We've got a series of higher highs and higher lows already at this stage, so we're trending down, and we've trapped here. We know we've trapped on the 30-minute, so everything, I don't know why it's doing that, but anyway, you've got trapped, that's supposed to say 30 minute. You've got a trap on the 30 minute, so we'll put that for trap. We've got a trap on the 5 minute. We're trending down. So next time I see this candle, what do you want to do here? I know it's a 1, 2, 3 move, but when you see this, you want to go short. And in fact, what we did was we put a sell limit 1/2 tick above this candle here. So that's your entry right there. And as you can see, that was the beginning of a sharp move down. Now, our targets were, we had a 52 target, which is here. And as you can see, that's where the day ended. But the 5 minute bars were huge and whippy, and it makes it hard to hold on. That's why we didn't today. But other things you can do are things like, and this is what we did for Confluence. We drew the measured move from here to here, and then we extended it from here, and this gives you your where was it? Was it from there? No, it wasn't from there. This is for the 52 level. So if I put it there, you'll see that if I hover around 52, it's just about there to the tick. So we had the confluence of the measured move and the 52 target, which is just 10% from this high to this low. It's 10% off this low. Because people tend to front run pivots, so you want to get out a bit before. So that's the reason for that target. Another target you could get is using a different measured move. So you, instead of going from this extreme here, you go from this one, because this is where the breakdown occurred. You can see this is where the red bars started to, you got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 red bars in a row. So you can take that as the beginning of the trend, go down there, move that back to here, and this gives you your you can see you can look at this or this, and then you use price action to confirm or negate. So if you had this on here and you see this, then you need to be getting out when it doesn't follow through under this candle, because if this is a long bias candle and this is truly a trap, then it should sell off down here, and it didn't. It left a wick behind. And so you would know to get out here at this measured move. And so we got in at 85.5. We were looking, there was some support at 70, and this is what got us out of the trade at 75.5. We trailed. But if you were going to add, and this is what we would normally do, we would add at the next trap. And so where is the next trap? You see wick here, we've got a double bottom here, and then triggered, you got all the people who went long on the close here, all the people who went long on the break of the high of this reversal candle here, and then it closed back inside. So all those who bought above the high here of this candle are gonna start to feel the pain when we break above with one weak candle, and then we close down with a strong red, which is the same size as the green. And this is the place you want to add. So the perfect trade would have been 85.5. Add here at that looks like 73.5. Your blended entry would be 79.5. Put the stop above here, either above this candle here or above here. So if you get in 79.5, you can move your stop to 82.5. So you're risking 3 pips with 2, rather than more pips with 1, because the original stop was above this high. So you've reduced your risk and you've got 2 contracts on, and then you take it off somewhere down here at 61. So 79.5 blended to 61, all out at 61, or 18.5 pips on 2 contracts. And as I remember it, that is, well, the money's not really important, but 18.5 times by 25 and that would give you $462.50 before commissions, and you'd pay 2 lots of commissions, which would be $736. So that's the way we should have done it. What we did do, we got scared out at the 70 handle here, 770, and only ended up with 10 pips rather than 18.5 on 2. We ended up with 10 pips on 1. So that's how today went. And just briefly before I go, I'll show you, because that's an example of how not to do it. Now I'll pause the video. Here's an example screenshot I did of how to do it. So entry there, second entry there, out one here, out the other here. This last one was meant to be out here, so it cost me 58.82, but still was a good trade, as you can see here. Only risking 100 on a 1 lot in the beginning, and then got that risk down to 75 on a 2 lot by moving the stop here when we added here, and then gained like $330, so more than a 3-to-1 on the initial risk, and a 4-to-1 on the blended risk. So that's how you do it. You can pause the video and read that stuff if you're interested. I think I'll leave it there for now, as the video is 11 minutes and a few seconds. Just wanted to share what type of thing we're doing on our way to getting funded with Top Step Trader. So that's it for now. Take care and catch you all in the next video. Bye for now.